Hello, Facebook friends, family, and clients. This is Adam Coultish with CL Capital Group, your local mortgage broker firm, with this week's episode with a real life scenario, okay, a real deal that we just helped clients with to highlight so that you can take away a few things, find out what we're doing, and if you see anything familiar, then you know what to expect in your own personal situation. So just as reference, I am on location in beautiful Prince Rupert, British Columbia, just so you know why I'm outdoors, as we can work from anywhere as mortgage brokers, able to fund mortgages all over the country for anybody. So anyways, just want to get to our shared screen here. I'm going to show you my deal scenario. So this is this mortgage we just did. Okay, can you imagine being these clients? Okay, this is basically a pain point for me. Super frustrating. This kind of stuff happens to people, but this home in particular is a single family dwelling. Okay, that's what SFD means. Single family dwelling sold for $1 million in Langford, British Columbia. Okay, so the clients had a 35% down payment. So the mortgage they needed was $650,000 over 30 years. Now, why did they get a 3.99% one-year fixed with Equitable Bank? Okay, instead of, let's say what you might see out there is 2.7 or 2.99 or something like that. Why did they not get a best rate? Okay, and then also what happened? Well, these clients purchased their new owner-occupied home. Okay, they're going to move into it. This is going to be home. Okay, and they removed subjects. Okay, they removed the financing subject. They removed their home condition, home inspection subject. But they removed subjects based on their bank's representatives' verbal approval. You know how confusing that is for clients out there when you are pre-approved from your bank, or they tell you that everything's going to be okay, and you remove subjects, which means you are contractually obligated to close on that home, and then you go back into the bank and they tell you that, well, actually we need an appraisal, or we need more documents, or no, now you're not approved because we need more documentation. So you can see I'm passionate about this, and this happens to people all the time. And then we come in, if you're actually working directly with your bank, then we're obviously able to fix this. So what happened? Well, this client has been working in their trade industry for over 10 years, okay? Really well established, really talented tradesperson. But they incorporated themselves, which means they quit their job and they became business for self and went out on their own. That's awesome. Takes a lot of guts to do that. But did you know that if you've been self-employed for less than 2 years and you don't have 2 years of financial documents, you can't get approved at a typical bank, okay? A bank that you can walk into. They just want to approve you. It's not enough history behind you. Okay, but that's something you might want to know before you go buy a house. Anyways, there are banks out there through the mortgage broker channel that will lend to you based on taking a look at the deposits that you have made into your bank account for all the work that you have been doing in the past year or 2 years, and they will use those deposits as income. Whereas a conventional bank or the other banks, they won't, right? They say, sorry, we can't help you. So of course you can. You say, I can afford my mortgage payments. I'm doing really well. Anyways, so Equitable Bank through the mortgage broker channel, through our brokerage, is one of the banks that can help you if you're newly business for self. So we were able to fund this mortgage for this client. You'll notice that their interest rate is higher than maybe what you see on TV or on the internet. But here's the benefit. This person's business for self, which means out of all of the income they make, they get to write off a ton of it and save a bunch of taxes. So really, people who are business for self actually at the end of the year come ahead in a lot of ways on all of the income they make, because they might pay a little more mortgage interest, but they're saving a ton of tax. Okay. Anyway, so just want to let you know there are solutions out there for you if you encounter any troubles at all with your financial institutions. Maybe go to a mortgage broker first, or at the very least second. And I just wanted to let you guys know if you see anything like this. So anyways, thanks for tuning in. Have a great rest of the week. Cheers.